So sell side's below there. So the market runs up, takes buy side one more time, punches it, and drops all the way back down. And then this tiny little shallow run right below there, that was enough to send it going the other direction. Now, admittedly, I was watching and we had our first snow. It didn't accumulate to anything, but it was beautiful seeing these big golf ball sized snowflakes falling down in Maryland out back of my house. And I was watching this buy side imbalance, sell side inefficiency, which is a fair value gap, but it's lacking what? Sell side delivery. So we see this market drop down. See this candle here? Its low is lower than this candle before it. And the next candle after it has a higher low. So we have a low with a higher low on either side of it, a swing low inside of a buy side imbalance, sell side inefficiency after a shift in market structure, after a hunt of sell side liquidity. That's institutional order flow entry drill. It rallies again, creates another imbalance, drops back down into it here, rallies after creating this fair value gap there. It's stalled there. I want to see it go above that and accumulate and build more of a support area, and the market rallies up to 4,000. We got 4,000. I mentioned that on Twitter, and then it broke down, and I had this volume imbalance and this volume imbalance annotated, and I was wanting to see it support that. And the last line of defense was the order block. We just kept eroding down into it, and then finally, post 9:30, we had one more drop down into this fair value gap, and I wanted to see it go through here and then spike down to that. That's what I was looking for. I would have been preferring that based on the hourly chart and the 15-minute time frame, because that would have wiped out all the sell side, because this is too shallow for my personal tastes, and it just never gave me an opportunity. So we can be upset. I could sit here and give you all kinds of complaints and such, but I can find a trade every day. It's not a big this gap in here. Be mindful of that because I mentioned it on Twitter. This is going to be referred to as the red fair value gap. Okay. So I was saying, watching this fair value gap, and if I'm bullish, what I like to see is a PV array that fails and it becomes an inversion level. And what do I mean by that? I'll explain in a moment. We have this up close candle, the last up close candle, and this swing high before taking out this low here. So that green candle, that's what I'm highlighting, that yellow rectangle one. That's a bullish breaker. It trades above it, takes out liquidity, and then trades down below that low, takes out liquidity. That is a highly manipulated market environment. This is what I meant by saying it's sloppy. This could have very easily went into seek and destroy for the rest of the afternoon and never have gone above this high or below this low. It just could have went back and forth chopping and taking out every little short-term high and low. The fact that we dropped down into this fair value gap again, took out sell side, rallied up. At this moment here, I said it has the framework for the shift in market structure here with the fair value gap. If it's going to hold, it could have wilted and took out the 39.84 and 39.82 sell side. It was unwilling to go lower, completely repriced all the way up to the top of the breaker. Perfect delivery, perfect delivery. Then we went down into what? Boom. There's that gap, that red fair value gap. If you look at my Twitter, I'm cutting through candles, folks. Okay, I'm not supply and demand. Okay, there's nothing like what I'm teaching you. I do not ignore or forget about an imbalance once it's traded to and rebalanced. That's logic. That's narrative. Okay, this point right here was before the 9:30 opening. It was part of the narrative I was looking for. I wanted to see this be reused in the future because the algorithm's going to remember this imbalance. It's not going to look at this high and this low and say, oh, well, this no longer matters, like anybody else that would be familiar with inefficiencies. So the algorithm's going right back into this. The market drops down into that fair value gap. That candle's high. That right there is what I was referring to. Watch and see if it offers what? Support. It's an order block. Down closed candle. Perfect delivery. But that body stopping dead in its tracks inside that fair value gap right there. And then off to the races we go to 4,012. Here's that fair value gap again. Market rallies up into 4,000, expands through it, consolidation, creates another fair value gap in here. Between 950 and 1010, there's a macro. There's going to be another little short order of instructions for the algorithm to seek another setup, either to reverse or continue. You see the fair value gap here, trades down until here, accumulate, reaccumulate, sends it to the top of the fair value gap on the 15-minute time frame. To 1750, and then back down to consequent encroachment, which is the midpoint of that shaded red area. It may not be red for you. I don't think it's pink, maybe salmon colored. I don't know, but half of that consolidated, accumulated more, rallied outside of it. Here's that area here, rallies again, consolidates. Then I mentioned as long as we remained above 40.12, that we would see 40.35 and a quarter. The market rallied right up into that, and then I sent a tweet saying to screenshot your 1 minute chart as we delivered what we were looking for. Then the market pressed on into 40.51, retraced the lunch hour. And there is a consolidation most times in the hour between noon and 1 o'clock. That's what we're seeing here. Okay. So we've been bullish. And I've taught this in the 2022 model last year on my YouTube channel. If we get a retracement or a reversal in the afternoon session, it's going to aim for the lows formed during the lunch hour. If you're trying to continue going long, and we haven't reached an objective, which unfortunately we do here, at 40.55 and a quarter, that level was the old rejection block from the daily chart. Again, what I mentioned in the beginning of the video. We'll cover this in a moment here, all that business, but the sell stops below this relatively below. Once we went to that objective on the daily chart, any retracement lower, it's going to attack, yes, the lunchtime lows, and the algorithm reprices down to it here, and all the way back down into a fair value gap there, and back into our 15-minute fair value gap that was given as the initial upside objective, range high of 40.17 and a half to 40.12 and a quarter. That's that area here, and it does it perfectly. Stops dead in its tracks, right to the tick, closing in that fair value gap with a bull shoulder block. Nice little reaction here. That's 5.
I did want to add, somebody said that the sound was pretty low. I was actually on my phone earlier when I joined the call first. It does sound pretty low from your phone. So either use a laptop or I think yeah, you should probably turn up the volume on your side. Yeah. It's fine with like headphones or a laptop. Like it'll play the sound pretty loudly. And then there's also a sound button on your actual Discord that you could turn up. Some people have that down like lower. So you can also see if that's your problem. Yeah, that was pretty solid. Did you go over any concept in the beginning of the call? Okay. And it means nothing without the time aspect. If it runs into some sort of liquidity or it creates like your breaker block model, it's not going to be important and it's not going to be referenced unless it happens during a specific time of day, like during that kill zone or during that macro. All right, thanks for joining. Good call, Christian. Catch you guys next time.